Exchange-traded funds, or ETFs, have become increasingly popular among both new and experienced investors. This is due to many benefits they offer, such as low cost, diversification and ease of trading. But if you are new to investing in ETFs, the process can seem overwhelming. Here's a step-by-step guide to help you get started with the basics. Step 1. Determine your investment goals. Before you begin investing in ETFs, it's important to understand what you want to achieve in your investment. Do you want to build wealth over the long term or generate short-term income? Are you looking for steady growth or more aggressive growth potential? Once you have a clear idea of your goals, you can then determine the types of ETFs that align with those goals. Step 2. Research different ETFs. With thousands of ETFs available, it's important to research the options available to you and determine which one align with your investment goals. Look at the ETF's investment objective, fees, and holdings to ensure it aligns with your investment strategy. You can also consult with a financial advisor to get better understanding of which ETFs may be suitable for you. Step 3. Open a brokerage account. To invest in ETFs, you will need to open a brokerage account. A brokerage account is a type of investment account that allows you to buy and sell securities, including ETFs. When choosing a broker, it's important to consider factors such as fees, available ETFs, trading tools, and customer service. Step 4. Decide how much to invest. Next, you need to determine how much you want to invest in ETFs. It's important to keep in mind that investing in ETFs is a long-term strategy, so it's usually recommended to invest a portion of your portfolio rather than all at once. You can start small and gradually increase your investment over time. Step 5. Buy ETFs. Once you have opened a brokerage account and determined how much you want to invest, it's time to start buying ETFs. You can purchase ETFs in a single trade or through investing in a systematic investment plan such as dollar cost averaging, which allows you to invest in a set amount of money at regular intervals. Step 6. Monitor your investment. After you have invested in ETFs, it's important to monitor your investment and adjust your portfolio as needed. Regularly review your investments to ensure they are still aligned with your investment goals and make changes as necessary. Investing in ETFs can be a simple and cost-effective way to grow your portfolio and achieve your investment goals. By following these 6 steps, you can take control of your investment journey and invest with confidence. However, it's important to remember that investing in ETFs does involve risk, so it's crucial to carefully consider your options and always consult with a financial advisor when in doubt.